So a question that comes up almost every time I talk to somebody who's thinking about selling their home is some version of, are we going to owe tax on this? Or how do capital gains taxes work? Or is there going to be some kind of money we owe the government after selling this house? So this video addresses that topic. Now, one thing I do want to say right up front, this video is specifically for folks that own the home that they're living in and are thinking about the tax implications of selling that home. If you're an investor or you've got something more complicated going on, contact me directly. Also, I am not a tax professional. Do not consider this to be tax advice. It's just some things that you should probably need to know if you're thinking about selling your house and you have a concern about if and when and how much money you're going to owe Uncle Sam. So the basic definition of a capital gains tax is that it is a duty or a fee or a tax levied on property and possessions you've held for more than a year that you sell for a profit, including your home. But there are some special exemptions if you're selling your primary residence that can exempt you from some or even all of the capital gains taxes that might be due. The homeowner exemption. The IRS gives each person an exemption of $250,000 against capital gains tax. So now that's each person gets a $250,000 exemption. So a couple would get a $500,000 exemption. So without getting into the details, if a couple bought a house for $500,000 and then sold it for $1 million, they would have a capital gain, but they wouldn't owe any tax on it. Homeowner exemption fine print. Number 1, the home must be your primary residence. Number 2, you must have owned the home for at least 2 years. So home flippers and investors do not apply. Number 3, you must have lived in the home for 24 of the last 60 months. Now that last one is kind of interesting because the question that comes up occasionally, in fact, the transaction I was involved in last year, is that the home was a rental. But in that case, the home had been a rental for about 35 months, and for the previous 10 years, the couple had lived in it as their primary residence. So does that meet the exemption for living in it for 24 out of the last 60 months? In their case, it absolutely did. Now, what about the tax rates? Let's assume that either A, you don't qualify, or B, your gain is in excess of the amount that's allowed to be exempted. What happens then, and what are the taxes that apply? There's a zero capital gains tax for single filers that earn below $39,375, for married joint filers who earn below $78,750, and for those filing head of household that earn less than $52,750. There's a 15% capital gains tax on gains above the exemption amount for singles that earn between $39,376 and $434,550, for head of household between $52,751 and $461,700, and for married joint filers that earn between $78,751 and $48,850. Now the final category is a 20% capital gains tax, and that's for folks that are individuals that earn above $434,550, that are married and filing joint returns above $488,850, and for those that are head of household filing above $461,700. So the amount you owe, if you do owe a capital gains tax, depends totally on your income and your filing status. Now, are there some things that you can do to reduce the impact of the capital gains tax? Yes, there are. The first thing to understand about that is it's not quite as simple as what you bought the home for and what you sold the home for. So let's get into that and what the details are. Number 1 are the selling costs and fees. You can deduct those from the sale price of the home. Number 2, documented home improvements. You can add those to the purchase price or the basis of the home. Number 3, tax credits for energy improvements. You can also add these items to the purchase price or the tax basis of the home. And number 4, assessments that have been made for city, county, or state tax improvements, those can be added to the purchase price or the initial tax basis of the home. So hopefully this helps educate you a little bit so that you can start to understand the possible tax implications of selling your home. Of course, for real tax advice, contact a professional. Now, if you're interested in selling your house and you want to talk about the strategies and ideas that I have to improve the selling price of your home, contact me. Also, if you're thinking about buying a house, we can talk about that too. You can call me. My number is 949-413-2371, or you can also email me, michael@housamgroup.com. And lastly, should be right above my head, there's a little button here, or after the video, there's some places. You can also subscribe to this channel. Every 2 weeks, I do a marketplace update, and then I also do regular educational videos like this one for home buyers, home sellers, and mortgage borrowers. Thanks so much, and have a great day.